Hey, so you're watching Nvidia. You've seen the run-up, and now with earnings on the horizon, you might see the price start to dip on some random news or new moves introduced by President Trump. And the first instinct for almost everyone is to think, is this it? Is the party over? Should I sell? That's the costly mistake, believing that every dip is a disaster. The solution, or at least a more calculated approach, is realizing that for a stock like this, there are patterns, historical echoes, and the data shows that the Q2 pre-earnings dip for Nvidia isn't the end of the story. In fact, it's often the beginning of the next chapter. Look, if you're short on time, here is the single most important takeaway from this video. Historical data for Nvidia's second quarter shows a predictable dip roughly 2 to 3 weeks before the earnings announcement, and it has been a prime buying window since instead of a signal to panic. For those of you sticking around, welcome. I'm DataCat. This channel is pretty new, only about 3 weeks old, so thank you for being here. My background: well, I spent years as an analyst inside one of those giant Fortune 50 companies. It was a world of endless spreadsheets and PowerPoints. I guess you could say I've reluctantly traded the corporate grind for different spreadsheets, but now with more laser pointers and keyboards, which my cats seem to appreciate. My goal here is simple: to take a clear, data-first look at the market, without the usual hype. If that sounds like something you could use, consider subscribing. It's just one click, but it makes a huge difference for a new channel like this. Alright, let's talk about Nvidia. To understand where Nvidia might go, we first need to understand the fundamental story. What is the engine driving this thing? And recently, the biggest story has been China. On July 29th, news broke that Nvidia placed a fresh order for 300,000 of its H20 AI chips with TSMC. Now, that might sound like just another order, but you have to understand, this is on top of an existing inventory of 600,000 to 700,000 units they already had. A company doesn't order more of something when it has a warehouse full of it, unless it is absolutely certain that demand is not just strong but accelerating. This isn't about clearing out old stock anymore. This is a proactive move that signals immense confidence from management about future sales. And this is happening despite US export controls. What this tells us is that Nvidia's strategy of creating compliant chips specifically for the Chinese market is working perfectly. They've managed to navigate a very tricky geopolitical situation and have secured a massive multi-billion-dollar revenue stream that many analysts thought might just disappear. This effectively makes China a captive market. You see, while domestic competitors like Huawei exist, their chips just can't compete on performance, and more importantly, they can't compete with CUDA, Nvidia's software ecosystem, and it's so deeply integrated into AI development that switching away from it is incredibly difficult and expensive for these big tech companies. It's like trying to convince a cat that has only ever eaten premium hand-flaked salmon that it should now be happy with generic dry kibble. It's not going to happen. No matter what Chinese propaganda suggests, their tech giants are hooked on the performance, and Nvidia is the only supplier. By continuing to supply this market, Nvidia is also playing defense. Every H20 chip they sell is one less opportunity for a local competitor to gain a foothold, to get the revenue they need to fund their research and development, and to one day challenge Nvidia's dominance. It's a quiet, strategic move to maintain their global moat. It's like that big neighborhood cat that doesn't need to fight. It just sits on the fence and stares at the other cats until they decide to go home. It's not a brawl, it's just presence. Okay, so the fundamental picture is strong, but that brings us to the immediate question. With earnings coming up on August 27th, the stock keeps making new highs and is currently trading around 176. Where does it go from here? This is where we look at the historical data. Like Palantir, I've analyzed Nvidia's price behavior 30 days before and 30 days after its earnings announcements for the past couple of years. And a clear pattern emerges. The run-ups in Q4 and Q1 are usually wild and aggressive, most likely driven by holiday sales and excitement surrounding their full-year guidance. But the Q2 and Q3 periods are different. They are calmer, and more importantly for us, they seem to have a predictable rhythm. Let's zoom in on just the Q2 performance. This chart isolates the price action for the second quarter of 2023 and 2024. You can see that in both years, there was a distinct dip before the price recovered and climbed into the earnings announcement. This was the moment of maximum weakness, and potentially the best entry point. In Q2 2023, the biggest dip happened 12 days before earnings, with the price dropping about 8.8% from where it started the 30-day window. In Q2 2024, the pattern was similar. The low point hit 21 days out and the dip was even steeper at 11.4%. Now, a dip is just a dip unless you know what signals to look for. And there are two very specific technical signals that flashed on both of these days. First, the RSI. On those exact dip days, the RSI fell into the mid-30s, nearing oversold territory. That's a sign that selling pressure is high and a bounce might be coming. Second, and this is the most crucial signal, is a pattern I call the bullish undercut. To understand this, you just need to know about two trend lines, the 50-day moving average and the 200-day moving average. The 50-day reflects the short to medium-term mood, while the 200-day tells the long-term story. In both of these Q2 dips, the price did something very specific. It dropped below the 50-day average, which is a move that often scares short-term traders. But, and this is the key, it remained well above the 200-day average. This confirmed that the primary long-term uptrend was still completely intact. So, the signature of a Q2 buying opportunity in Nvidia, based on this data, is a pullback that's sharp enough to break the 50-day trend line and push the RSI into the 30s, all while the long-term 200-day trend holds strong. This historical pattern suggests that the seasonal weakness we might see in the coming weeks shouldn't be viewed as a bearish signal, but rather as a potential opportunity. So, to bring it all together, we have a company with an incredibly strong fundamental story, solidifying its dominance in a key market, and we have a clear, data-backed technical pattern that has historically signaled a prime entry point about 2 to 3 weeks before the Q2 earnings call. The average growth in these past periods, by the way, points toward a price target of around $200 heading into this quarter announcement. Of course, you have to remember, this is not financial advice. I'm just a person who likes cats and spreadsheets. You have to do your own research and make the call that's right for your own portfolio. I hope this breakdown was useful. If it was, hitting that like button and subscribing really does help get this information out to more people. DataCat out, stay sharp, stay curious, and I'll see you in the next one.